I've been warning about this American debt bomb and the way we're running the entire country, the entire economy. I've been warning for decades, my entire career, because this is going to end clearly in a really bad way. You've heard it said that the American economy is so strong. And I know you have, because I've heard the same things from the same people that you saw on TV when they say it. I was watching it too. You've been told the economy is so strong so many times. Is it? Because they're pointing to a lot of really good things, a lot of things that the American economy is doing. How do you gauge strength? I have a different view of it than some of these economists that have hidden motivations. I need to tell you that Bidenomics is working, or that the economy is so strong even though you can't afford to pay for cheese. We'll get into all of this. We're going to settle this argument once and for all. And most importantly, of course, what it means for you, what to do about it, how you can benefit, land on your feet, and actually turn lemons into lemonade. Now, I know I say the economy is weak, but let me ask you, why are they saying it's so strong? Because there are some really valuable things that are going on that are good for the economy. So let's give credit where it's due and check out this. There's a booming stock market. The S&P 500 is up year to date. Take a guess. 15% year to date. Meanwhile, we've got this really low unemployment rate, 3.7%, which is really healthy, really strong. And this is one of the things that Jerome Powell points to say, look at how strong the economy is. And you're going to continually hear again and again all these claims about how Bidenomics is working, or how the current administration is doing the right thing and they're helping the economy, even though every metric I look at that tells you the economy is getting worse is getting worse. We're going to get into all of this deeper, but most importantly, we're going to talk about what you can do about it, how you can benefit. Here on this channel, we talk about how to turn a small investment into a small fortune, how to avoid the risks. We look at two things for you on the American economy, and we talk about it on this channel. Risks and opportunities. Where can you change your life by putting a few $100s into an investment that you just wait and then it's worth a lot more, and you take the money out and spend it on your kids? Long story short, if you want to thrive through this massive, once-in-a-lifetime economic breakdown, your first step to bettering yourself, landing on your feet, is subscribing to this channel. Now let's get into why people are telling you the economy is so strong, even though we'll get into it. The reason they're telling you the economy is strong is because every one of them has hidden motivations. They all want to show you what I've been doing is working, or what we're talking about is working, or this administration is doing the right things, even though the economy is clearly, obviously not doing well. By talking to any regular person, go to the grocery store and then tell me the economy is so strong. All this inflation's not a sign of a strong economy. The inflation's a sign of a weak economy. That's just add it to the list. Keep a track in your mind, all these things I talk about that show growing weakness in the American economy in the face of all the people in power telling you the exact opposite. They're gaslighting you. Every cheerleader for the strong economy has an agenda. Politicians like Joe Biden want you to believe that their policies are working. Officials like Jerome Powell highlight positive numbers while downplaying vulnerabilities. And what they're not mentioning is how quickly these indicators can absolutely crumble or reverse. We've already seen the layoffs. They just haven't absorbed into the unemployment rate yet. That will happen, and the layoffs will increase. Bankruptcies will increase. Delinquencies will increase. And they are all doing that. We'll get into that in this video. But as things get worse, you're going to have unemployment rising as the recession begins, not ahead of it. What these politicians and people in power that are trying to gaslight you are missing is how quickly these indicators can crumble. Over 300,000 tech layoffs occurred in 2023 alone, the highest level since the dot-com bubble. Meanwhile, credit card delinquencies have surged to 7.3%, which is the highest it's ever been at in the last decade. And meanwhile, household debt's hitting a record, and it's hitting a record because people are battling inflation. They're having a hard time with this economy. And so they take on debt on their credit cards, or they borrow now to maybe pay it back later. Spend now, pay later. Can they pay later? That's the point we're at right now. We're finding out right now. Can people afford what they thought they would be able to afford? This is why we're having delinquencies and defaults. When interest rates were really low, people could just borrow as much money as they wanted, and there wasn't really a big carrying cost to it. So you could just borrow $500,000 is not really have a hard time paying off the carrying costs on that debt. And then interest rates go up, and all of a sudden now people are thinking, well, wait a minute. I don't have the money to be able to afford the carrying costs on this debt because now carrying costs are so much higher because interest rates are higher. And this is the point we're at where the mud's hitting the fan. The reality is coming back to the world. The chickens are coming home to roost. It's a point now, can people pay the money that they borrowed? Some of them can. Some of them can. I'll say it that way. So you've got on one side low unemployment, good stock market, and also the massive GDP of the American economy. But what's the real story? And I think that if you've seen these videos, if you've been around here, and I hope that you've subscribed so that you get to see all these videos, and we have a great one coming up about inflation. So make sure to subscribe, and also if you like this video at all, click like. It encourages us, helps us spread the word. But you're hearing all this positive things about the economy, but the real story is an absolutely dissolving economy, as if there's been acid poured all over everything. Think of the American economy as a structure slowly being eroded by acid. The signs are everywhere. Just look at purchasing power of the dollar. This chart will show you how much your dollar buys compared to not long ago. The US dollar's purchasing power has declined 97% since 1913, creation of the Federal Reserve. And the other thing that's out of whack, when an economy gets unhealthy, a lot of things get out of whack. One of which is housing affordability, which I've had an issue with for a while now, and I've been expecting housing prices, real estate, to come down across the board, and I was right in Canada. That happened already, and it's happening even deeper now. Don't try buying a condo in Toronto. That's not a good investment right now. But also, I expected prices to come down in the States a lot more, a lot sooner, and I still do. My outlook hasn't changed, but I just haven't got the timing right. I'm always early. This is just my curse. The median home price in the U.S. is now over $425,000. While mortgage rates have skyrocketed to over 7.5%, pushing home ownership out of reach for millions. Whenever you have a kind of schism like that, where people who need to buy houses, the value or the cost of the house is beyond what the average person that needs to buy a house would be able to afford, the way things normally go, when things get out of whack or sketched out like that, it always ends badly, and very little chance of it going up much higher, but I was wrong before. I don't see how real estate prices, especially as we're about to enter a recession, especially as the entire economy is about to reverse from greed to fear, all of this is happening right now. I don't see real estate prices going up like they have been recently, and I do expect them to come down markedly. Meanwhile, let's talk about the big ones, the debt and the deficit. You know, personal debt's your neighbor's debt, the debt of the company you work at, the municipality, the state you live in, the federal government, all have taken on way too much debt before, regardless of interest rates, but then when interest rates were low, everybody took on even more. And now everyone's sitting here with this big debt level on their shoulders, and there's not enough money coming in to pay for it. And that's when you get into a zombie country, zombie companies, where they can't even afford to pay the carrying costs, or they're paying just the carrying costs on the debt. It's like paying your minimum on your credit card. Then you're thinking, well, I've taken care of that for a month, but that amount just keeps on growing and growing, and it just keeps coming back. They're not solving the problem, they're just delaying it or putting it off. And that's what people are doing right now because they're financially strapped, and they all expect that they'll be in a better place down the road. They'll get their things together and they'll find a way to pay for what they owe. But here's the thing. I'm wrong plenty of the time. I believe that we're about to enter a very negative time for the American economy, American people, quality of life, levels of homelessness, impoverished people. I believe that we've feasted on all this greed, and it's all going to come back because we've over leveraged. There's so many ways that any one of about 14 different branches could break, and the whole treehouse is coming down. Federal spending topped $6.4 trillion in 2024, Well, tax revenues covered only 83% of expenses. Doesn't really matter though, does it? We're not bringing enough money from taxes to pay for the things that we've already spent. We buy things and then we say, should we raise the debt ceiling to be able to pay for what we've already bought? That's what's going on. People think that we're raising the debt ceiling to be ready to buy more stuff. We've already bought it. We've already used it. Now we owe the money. It's this question of, do we welch or do we pay? And the problem is, we're getting to a point where we're not going to be able to pay, even if we want to. We have great intentions. We want to pay what we owe. We want to pay what we spent, but we're unable to. There's a difference. That's when everything topples. Who among us thinks that this debt bomb, the great American debt bomb, is not a problem? I'm asking you, do you think that? And if you don't think it's a problem, tell me why. Tell me where you think this goes. How does this all end? The end of the road is not sunshine and rainbows. And it's coming up really quickly. And I'm sorry to be a wet blanket. That's why people don't like listening to me. I don't care. I'm going to stuff reality in your pocket. You decide what you're going to do with it. And something else you can keep in your pocket is the entire Peter Leeds team and everything you ever say. You get the Peter Leeds app on your smartphone, m.peterleeds.com. It comes free for anybody who's a peterleeds.com subscriber. Meanwhile, the annual deficit reached $2.02 trillion, pushing the national debt to $35 trillion, which is over 130% of gross domestic product. People always say, well, Japan had higher debt to GDP, so we're not as bad as them, so therefore we must be okay. Take it in a vacuum. Japan has a different economy than we do. High debt to GDP ratios are very negative. They illustrate weakness in an economy, and they typically get worse, and they typically go as long as they can until they explode. They blow up, everything falls. That's why you can have a wheelbarrow of German Deutschmarks. Nobody cares. And where are we at with economic stability? Real people on the ground, how's it affecting them? Homelessness has never been this high. Homelessness to me is a reflection, because I believe that the strength of a nation or a person is always about how you take care of the weakest among you. We should be, well, I'm mortified. We should all be mortified by the way that we are dealing with the problem of homelessness. People think the problem with homelessness is that people don't have a home. That's got nothing to do with it. Homelessness increased 11% nationwide in 2023, the largest jump since tracking began. So the economy is getting weaker visibly, that you see when you drive to the church in town. You see all the homeless people on the side of the road. Since they started keeping track of this decades and decades and decades ago, homelessness has never increased this quickly. Said another way, the economy is never getting dissolved by acid this quickly. Corporate bankruptcies in 2024 are up 38% year over year, signaling stress in the private sector. Oh, really? Bankruptcies up 38% from last year till now? That's absolutely insane. At that rate, soon every single business in all of America would be bankrupt. 38% greater than the year before? Do that for a couple of years, see how far we get. But at least you could say that we sell plenty of stuff to other countries, right? Here's the chart of the manufacturing index. Anything under 50 is decline, where anything above 50 is growth or expansion. We don't make a lot of stuff in America. We're making less, although we're doing a lot more efficiently with artificial intelligence and robotics and automation. All of that, it's tremendously more efficient, which is anti-inflationary, so that's something that'll keep inflation coming down. One of the factors pushing it lower, while there's a bunch pushing it higher. And like I said, our new inflation video is coming up, so make sure you subscribe so you don't miss that one. But it goes down to the balance of trade. How much do we buy from other countries, and how much do we sell to them? And I've showed you this chart many times. It's always negative by tens of billions, and it gets worse, and it's pretty standard that we're just buying stuff from other countries. And what are we doing? We're giving them American dollars for it. And so we've got this negative trade balance always. We're always just putting out more money than we're bringing in because we're not making things to sell. Not like we used to and not even close to what we need to be doing. And we're certainly not making anything in America, hardly anything. If you find a product made in America, that's an outlier and it's something to be purchased and supported and spread the word about it because you want to buy more things in America. And if we all did this a decade from now, the country itself would be in a lot better place. Quality of life would be better. You'd be wealthier. But what are we talking about? I mean, this isn't going to happen. The U.S. trade deficit widened to over $1 trillion annually, underscoring a dependence on foreign production and debt. And the overused analogy you always hear is about frogs in a pot. You turn it to boil, and they'll just stay there, gradually warming up. They'll never jump out. They'll just stay there till they're dead because they'll boil. Look around, man. We're frogs in a pot, and if you think anything different than that, enjoy the next couple of years. Like frogs in a pot of slowly boiling water, most people don't realize the danger until it's too late. The warning signs are clear. Rising default rates on car loans, currently at 9.3%, is the highest since 2008. What else happened in 2008? The global financial crisis. So since then, when everybody was losing their houses, everyone's losing their cars, auto loan delinquencies and default rates on car loans has never been higher. Meanwhile, people are making a little bit more money than a year ago, 2 years ago, a little bit. But inflation and the cost of living has grown by double digits. So, yeah, you're making more, but it's even more expensive to live. So are you better off or worse off? Just like 100 years ago, you could have got paid $5 a month, which doesn't sound like a lot, I know. But that was a good salary back then. It's a lot of money. And now some people making $50,000 compared to $5, and they're still not being able to pay their bills. That's an example, too, of what I was showing you earlier about the decline of the purchasing power of the dollar. You see how weaker it got. You used to have a dollar, and it could buy you things. It was powerful. Now it's just one of billions that we're just producing, and the problem being we're not done producing them. We are going to have quantitative easing coming up. We're going to create an entire massive amount of money to cover over all the stuff that we've already spent and the things we're going to spend on in the future in paying nurses and doctors and soldiers and teachers and firefighters and federal workers, all with money, most of it being created brand new right now. Will there be more US dollars in a year than there are right now? I'm asking you, what do you think? If you agree with me, you know that there will be a lot more, and therefore the value of each dollar is not as much. If there's $10, they're each worth a lot. If there's 10 trillion, a single dollar is not worth what it used to be. That's what's going on. And an increasing number of Americans are relying on their credit card to buy things like coffee. That is a statement in itself. You can drive by a patch of grass in front of the church in Victoria and see probably 150 homeless people sitting right there. And that's a visible manifestation of the weakening economy. But things like purchasing small items on a credit card because you don't have the money to buy it, that's a tell, it's a statement, it's a demonstration, an illustration of how this economy is getting weaker and how everything I'm telling you is playing out. And I've been talking about this for decades. This is not me showing up today. I'm not some Johnny-come-lately. I've been warning about this American debt bomb and the way we're running the entire country, the entire economy. I've been warning for decades, my entire career, because this is going to end clearly in a really bad way. And so now I'm just about talking to you and me. This is going to happen. We can't affect it. We can't control it. But you can control the actions you take, just like I'm controlling the action I take. It's going to be bad, and you're going to want to help out a lot of people in tough times, and you want to be in a position to do that financially. And so a lot of what we're trying to help you do is get through this economic breakdown on your feet so that you have some power on the other side of things. The entire world is changing right now, faster than it ever has been. I was talking to my contractor the other day. I miss the 80s. The 80s were great. 90s, pretty good. But just before we talk about what you can do to turn lemons into lemonade, I want to say this is not just an economic downturn. This is a system that is actually dissolving before our eyes. And I'm telling it to you, so you can't say that you didn't know or you weren't paying attention to this. And you either agree with me or you don't. I'm talking to people who agree with me. There's things you can do to land on your feet and help the people that you care about and be in a much better place than you would have been. I imagine that just about everybody's going to be in a worse place than now, but you could be in not as bad a place as you would be if you don't prepare. I think you understand what I'm trying to say. Some of you understand. Those people is who I'm talking to right now. Definitely getting involved in real money, which is precious metals like gold. Gold mining stocks will do even better than the price of gold. Generally, most companies do really well, especially if they're mining for, say, gold. And the price of gold goes, up $1,000 since we started talking about it on camera. And you can go back and look at it right now and see all the things we were saying about it and why China's buying was going to drive up the price of gold. And no one's listening to me until now, and they see it. They say, okay, that's why that happened. And I'm like, yeah. I also think you should avoid really high-risk things like, NVIDIA stock. A lot of the Magnificent Seven. I wouldn't be anywhere near that stuff. I wouldn't be close to it. And it doesn't matter if it goes up another 5% or 50%, 75%, goes higher. Wow, you missed out. You didn't miss out. It just rose when you didn't invest in it. But it doesn't matter if it goes up 75%, then it comes down 80%. These stocks will not be at the values they're at or higher than they are right now, in my opinion, a year from now, not even close. And everyone's talking about, this crash will be big. It'll be 85%. People are saying 30%. Yeah, whatever. This economy is reversing. Anytime there's uncertainty among investors, that's when you're at a transition point. Like now, when you can see that the volatility day to day is becoming more normal. I always tell you that whenever you see the volatility increasing, that's when you're at a market top or market bottom because it represents indecision among investors. At this level, people aren't sure what to do. So NVIDIA goes higher and higher and higher and higher. You definitely don't want to be on the train when that reversal point happens. When things turn around and start coming down across the board, you turn on the financial news one day and everything's just red across the board. And silver and gold mining too, by the way. Don't think that you're immune from it. I'm just saying the best investment, in my opinion, is to be in real money, which is gold, silver, precious metals. Some really modern, really disruptive technologies, a lot of companies that are benefiting from these new technologies and new understandings and artificial intelligence. There's a lot of opportunities here available to you right now that were not 2 years ago, were not 6 months ago. And this is what we do at the Peter Leeds newsletter. We're trying to find especially technology companies that are disrupting and they're going to make money no matter what happens with the economy. And the other thing we do too is we look at stocks which will do well, not in spite of the recession, which will be here soon, but because of the recession. A lot of companies that help other companies spend less money or be more efficient or save money, they're going to do great as long as they get past the proof of concept phase, which is one of the first things we look at when we're doing 29-point leads analysis on a company. And you know what you could have is a really strong economy with low unemployment, really good stock market, and your balance of trade is positive and your debt loads are diminishing or getting paid off. You can have a strong economy without all these problems that I talked about today. But you can't have a strong economy with the problems I talked about today. Every aspect of this economy to me, almost every aspect, feels so weak. And the only ones that they say are strong are completely reversible and historically don't reverse until we get into the tough times, which are just ahead in the form of a recession, which is so slow moving. We still have the same problems that we had in 2007 that we never dealt with. The global financial crisis, we should have washed out all of that over leverage, and it did, but then we just re-inflated, we just re-ballooned even bigger. We are so vulnerable right now. And if you take the part of your mind that's greedy, where you're saying, well, I've got $600 and I want to turn into $10,000 and therefore my life will be better. You can do all of that without even investing a dollar. Just make your life better. You can choose. You can choose to have a good day. You can choose to accomplish something. You can choose to not be lazy. You can choose to do something that's hard and do it anyway. And if you know the economy is weak and that it's going to be paying the piper, there's things you can do to set up now, such as, and I'm not giving you any personalized trading advice. I don't suggest you do any of this. put options. You can have inverse ETFs that do better when the stock market comes down. It's about moving out of the risk, which is what everyone else is invested in right now. The group, the mass, everybody and their grandma is buying Bitcoin. Will it go higher? Yeah. Will it go higher in the short term? I don't think so. I think it's going to come down first. But all of these growing negative things for the economy is why I'm saying that this is like an acid economy. There's just all these things that are dissolving before our very eyes, and they're clearly going to keep dissolving. And what I want for you is to land on your feet, make money, better yourself, help the people you care about, your loved ones. And the way to do that is to understand all these things I'm talking about. Navigate these changes. Understand that I'm right and that they are real. This weak economy cannot be ignored any longer, much longer. It's being ignored. Everyone's just looking the other way, paying no attention. Kind of like you would do with an illness. And you think that that's what would make your illness go away? How do you think it ends, right? So, same thing with the economy. Everything I'm telling you is going to play out as I'm telling you. I'm wrong plenty of the time. I'm often early. Everything's going to play out exactly as I'm telling you. You need to land on your feet. You need to make moves now. This is for real. This is life and death. You've got to get through the next year or two of what's about to happen with this economy, because it's going to be so extremely different than right now. And no one's recognizing that yet, but the people who recognize it now and start preparing for that eventuality are going to land on their feet. They are going to take advantage of opportunities that other people don't see. Don't make it harder than it needs to be. This is not a difficult game. You just need a little direction. You can do it. If I can do it, I guarantee you can do it. Land on your feet. This is a choice. Choose. I'm going to land on my feet. And then you'll know what to do about it.
I got problems, gotta solve them. They keep talking, I don't know them. I don't need that, don't owe them. I just make connection like a modem. Let me turn up, let me show them. Let me burn up, here, let's